Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to give the video a like, subscribe to the channel, and make sure to click the notification bell icon so you don't miss our next live stream or next video launch here on YouTube every day. Make sure you start your day off the right way. Don't forget your free morning brief that's waiting for you at ssftg.com/brief. In the top left, you can click on morning brief to jump into that. That's where you'll find all of our major DP levels right up here at the top, as well as a quick technical overview for the major 6 markets that we look at: the NASDAQ, the S&P, you've got gold, crude oil, the euro, as well as Bitcoin. Maybe you're looking to get a full game plan for the day, week, or month. Check out the join button below. Level 1 subs get a brand new members only video every single morning going over the major 6 markets and a game plan for the day. In addition to that, once a week I launch a weekly brief, and of course once a month we have our monthly brief as well. Of course, all members gain access to our private Discord chat server, and if you really want to get into the nitty-gritty, check out the live analysis room for level 2 subs, where you can see my screens in real time during the New York Stock Exchange Open. You can ask questions and interact with the other members, as well as bounce ideas off myself and everyone else. It's a fantastic environment, and I would love to see you in there. All right, and now on to the really fun stuff, the topic for today. Building a trade plan from the top down. So first of all, to build a trade plan, we need to have kind of a market to analyze. Now, this could be a futures market, could be a crypto, could be a stock, whatever your favorite one is. But the important thing is that we obviously have to start with a market. I like breaking down my markets into 4 different steps. The first one is going to be what I call the O zone. And the O zone is exactly what it sounds like. It's a really, really far out there chart that is not necessarily looking for the finer details. It's looking for the major pivot points, the major swing areas of interest, the big stuff. The O zone for me, from the way that I trade at least, is a daily chart. Now, a daily chart for some people might be that might be their entry chart, so just keep that in mind. This does have to be adjusted based on how you're approaching things. But for me, an O zone chart, that would be a daily, and this is where I'm going to be looking for any open gaps, like these green lines here, or any large volume nodes, or any major levels of support or resistance that are coming along the lines. But there's not going to be any major big zones that we can really focus on, because remember, this is a daily chart. Your O-zone chart is something that you're probably not going to see very often in terms of levels that you're going to be coming back to, just because it's such a large time frame. But we still need to know when the market is at a major turning point like that, so we can narrow even further down. So the O-zone is a chart that, to be fair, we're probably not going to utilize a ton in terms of trade decisions, but when we are in a big zone of interest, it plays a pivotal role in how you approach sometimes the entire day, sometimes the entire week. So if we look a little bit closer into the daily, really what I'm going to be looking to do is just like this: major trend lines, major channels, anything that stands out that could potentially be a level of interest. Along with that, if we zoom in a little bit closer, we can see there is an unfilled gap here, there's an unfilled gap here, and obviously just looking at the nearer term, this is an extremely strong bull trend. This being, let's see, crude oil 0321 contract, and at the moment this is a very strong move up. So that's really all I'm looking at when I'm talking about the daily. At this point in time, I know if the market pulls back, we've got a zone of interest that might be dipping back towards that 5622 area, the unfilled gap a little bit below that in the 5480s. But those are still pretty far away, considering that the market's up at 5685. We'll have to see if they want to pull back a little bit further to give us that next big zone of interest. Now, from there, we can narrow in a little bit closer. We have our primary zones of interest that we can keep our eyes on from the daily. Now we can zoom in a little bit closer, and this is where we can go into for me, the 60-minute chart. Now, the 60-minute chart, this is what I like calling the cliff. And let me load my chart template real quick here. All right, so I have my template loaded up, but you'll notice my channels and things look weird. Sometimes this will happen, at least I've noticed with NinjaTrader. So if you do have that happen, if you go into the data series, you can load up more days of data. That's usually the problem. So let's load up a year worth of data, and that should help fill in some of that weirdness there. There we go. So now the channels are a bit more accurate. We can actually rely on them. And this is where the 60-minute chart is going to be looking at some of the finer details. Not any of the crazy fine, I mean, we're not looking through a microscope or anything here, but this is zooming in a little bit closer from the ozone. We found the major pivotal areas of interest if the market were to come back to them. Now we can go in a little bit closer on the 60-minute and see what happened at those areas. Why were they interesting? They look good on the daily chart. This was an unfilled gap, but what happened there? This looks like it was a pretty big area of resistance that broke out of. So immediately 5622 becomes an area of interest if the market begins to pull back, because we've already seen structurally a reason to like that area. Now, we also have the other one, which is at 5476, 5480s or so. We had a nice little wedge formation and a breakout. It looks like that level has already kind of broken out and exhausted itself, though. That pullback right there, that was a pretty nice one. So that one might be a little bit done. But as far as more continuation up, we bounced off the lows of the channel. We're continuing up to the highs of the channel. Upside objectives would make sense towards around the 57.75s. And until we get up to that point, buyers are still continuing up. So it's going to be a buy the pullback type of trend going forward. So we're narrowing in and we're building more of a narrative in terms of what the overall approach is, what's happening when we're coming in from the really, really far out in the orbit ozone area. Now we're kind of coming into the cliff. We're seeing some finer details. Now we can go in even further, and this is where we start digging into the next one, which is a 15-minute for me, at least. And of course, give me 1 second here to load up my template. All right, there we go. So we got the template loaded up, and this is what I like calling the hill, right? We're coming down from the cliff, now we're on the hill. And from the hill, this is where we're going to analyze the finer details. Now we're on a 15-minute chart. We're a lot closer. We can see some more things. You'll notice an extra indicator on here as well. It's the volume profile, this blue volume bar thing here, as well as these gold lines. And these are going to give us a little bit of extra detail, things like VVPs. Don't forget to check that video out if you haven't seen that yet. But there are also other things like repetitious moves, measured legs. This is where we're really going to start honing in. We know the overall structure is really bullish. The narrative is really bullish. We had a lot of resistance that built up around the 55 area, and it broke higher. We had a lot more resistance built up around the 5620 area, and it broke higher. So we're building a lot of continuation to the upside. What are a few things that stand out from a volume perspective now? Well, from a volume perspective, one thing that stands out very obviously is there is no volume right there. If we extend that forward, that'll give us our zone. But right there, there's just no volume. It's a total dip, and that's what we call a VVP, a volume void pocket. Again, check the video out if you haven't seen it yet. But these are zones of interest that the market loves to pull back and backfill some of that volume to kind of finish the job. It gets the job done. And if we look previously, that's what that pullback to that pullback was, a near perfect bounce. And there are a few other areas along the way, but it seems like for the most part, that's a big one that really stands out. If we go a little further down, there's another very obvious one, a bit further back towards like the 53s or so. And then that's really about it as far as the volume goes. There might be some small volume here, but it looks like most of the volume down at the bottom of that day was kind of dead, so I'm not really going to worry about that. Now, the gold lines, these big gold lines right here, these are previous POCs that have been untested, or what I call a naked POC. These are levels that formed. It was the point of control, if you're unfamiliar with volume profile. That's just the point where the largest amount of volume traded, that whatever price it was. In this case, looking down as an example, 52.58 was the largest volume traded price on crude oil on January 31st, or maybe that was going into February 1st, whatever it was, inside there. But you'll notice that the market never came back and tested that area again. And that's what makes it a naked POC. The POC being untested then draws forward as a big thick line. Now, the cool thing about this is that these levels, when you start seeing them cluster together, that gives you a really big clue, because remember, this is the largest point in volume that traded. This isn't like some small, insignificant nothing number. This is a huge level, obviously. The volume backed it up. So when you see a bunch of them clustering together, it can give you a pretty big clue. Like here, as an example, we had a POC that built and, well, didn't get very far. The next day had a POC here. The next day, POC was here. Next day here. Next day, no, it was actually a little lower. The next one was there. The next one was there. You'll see they're all clustering together. There's a huge amount of volume that's taking place here. And then the market broke further up. That's giving us a really big clue in terms of what happened here. This might have been buyers taking profit from an earlier rally. It could have been sellers trying to push the market back down below 50. One way or another, though, it broke above it, and it broke above it in a pretty big way. So buyers are going to be looking to buy on the next pullback. So we can start cataloging where these next pullback areas could be of interest. Well, we already know 5622 is a nice structural area, and we have a naked POC at 5605. Is there any other level of structure that we can derive off of that? Possibility of a channel rising higher, maybe a little bit of a wedge top. That would be the first break of the wedge, and typically those are failures, so you'd be looking for a bounce back up. Now we've designed an entire plan. Right? This is where we can go to the next step, which would be the entry chart. And that's where you zoom into a much faster time frame to locate an entry or a zone of interest where you can, well, find a way in. For me, an entry chart can be a lot of different things. If you're looking at time-based charts, a 1-minute chart is usually pretty good. These are just your basic entry charts, but they can be faster 500 tick time frames, volume time frames, second-based time frames, something that's a little bit quicker. Let me load up my template real quick here. All right, there we go. So on a 1-minute chart here, this is the entry chart. And remember, it's designed to be very fast. For me, it's a 1-minute chart, a 500 tick chart, a volume chart, something that's quick. This is the fastest time frame that you're going to utilize to locate entries once prices moved into your zone of interest. And that's the important part. Waiting for the market to get to your zone first before you start fabricating extra trades that might not necessarily be there. That's a topic for another video. But this is where you're going to really start looking for your entries. And your entries can be, you know, whatever your entries are based off of. Second entries, Fibonacci's, MACD crosses, whatever. I don't care. But that's where you're looking for your entry patterns now in this faster time frame. So in this way, we're able to basically, with the absolute largest levels backing us, allows these areas of support or resistance that we can whittle down to a faster time frame. And the really awesome thing about that is by utilizing the larger time frame zones for support where we're actually trading off of, like the daily or the hourly, but narrowing it down and taking your entries on those faster time frames, that allows you to still utilize that big target on the daily chart or on the 60-minute chart, but your stop, your risk, the actual risk getting into the trade can be based on a 1-minute chart. And that makes an incredible impact when you're looking at your risk-reward potential, especially in the long run. That's what can be the big difference when you're looking at long-term probabilities and long-term success. When you're talking long-term math, these are the kinds of things that you need to be looking to do. So when it comes to multiple time frames, do you use multiple time frames? Maybe you have an indicator that you use instead. As an example, a MACD, a really slow indicator that can kind of give you an idea of what the trend is without necessarily having to go through all of the different time frames. As always, I love hearing the things that you use and your approach in the comments below. So make sure to drop those down there. And like we always say, stay safe out there. Keep those stops in play and let the winners run. Have a great day, and we'll talk to y'all later. Thanks.